Mastering Advanced Stock Market Strategies with Jim. Welcome back to Smart Money with Jim. If you've watched Part 1 and Part 2, you've already built a solid foundation for stock market investing. In this final part, we'll focus on advanced strategies, risk management, and key tools to help you succeed. We're going to break down these complex concepts into bite-sized pieces you can use right away. Grab your notepad and let's dive in. Alright folks, before we jump into the deep end of the pool, let's do a quick recap. Remember where we started? Back in Part 1, we were all about the fundamentals. We talked about what stocks are, how this whole crazy stock market casino works, and how to even get in the game by opening your very own investment account. Then, we kicked things up a notch in Part 2. We explored the power of diversification. Don't put all your eggs in one basket, people. We talked about the difference between playing the long game with long-term investing and the fast-paced world of short-term trading. But today, oh boy, today is where the real magic happens. Today, we're diving headfirst into the world of advanced investing strategies. We're talking about the tools and tactics the pros use to make serious money. And the best part? I'm gonna break it all down for you in plain English, so you can start using these strategies today. Listen up, because this is where the rubber meets the road. We're going to unlock the vault and unleash 3 powerful strategies that can supercharge your portfolio. First up, we've got dollar cost averaging, or DCA, for you cool cats out there. The market goes up, the market goes down, it's like a roller coaster. DCA takes the emotion out of it. Invest a fixed amount regularly, no matter what the market's doing. It's like clockwork. Put in $200 every month, rain or shine. You'll ride out those dips and come out on top. Next, we're diving into the world of value investing. This is Warren Buffett's playground, folks. We're talking about finding those hidden gems, those undervalued companies with rock-solid fundamentals. Look for low PE ratios, that's the price-to-earnings ratio, a fancy way of spotting a bargain. Find companies with steady growth, and you're looking at potential gold mines. And for all you risk-takers out there, we've got growth investing. This is where you bet on the future. We're talking about companies on the cutting edge, revolutionizing industries like AI, renewable energy, and healthcare. These are the companies that could be the next Amazon or Tesla. High growth, high reward, but hey, a little more risk comes with the territory. Chapter 3. Now before you go betting the farm on some hot stock tip you heard on the internet, let's talk risk management. Because here's the truth. Managing risk is just as important, if not more important, than picking winners. First up, remember the golden rule of diversification. Never, and I mean never, put all your eggs in one basket. Position sizing is key here. Don't put more than 5 to 10% of your portfolio in a single stock, no matter how much you love it. Next, we're building a safety net, the emergency fund. This is your financial fortress, folks. Keep 3 to 6 months of living expenses in cash, tucked away in a safe and liquid account. This is your protection against unexpected life events, job losses, or market downturns. Now let's talk about stop-loss orders. These are like financial airbags for your portfolio. Set automatic sell limits to minimize your losses. Let's say you buy a stock at $100. Set a stop-loss order at $90, and if that stock takes a nosedive, your broker will automatically sell it, limiting your losses. But the most important risk management tool of all, your own emotions. Don't let fear and greed cloud your judgment. Stick to your strategy, ride out those market storms, and remember, this is a marathon, not a sprint. Chapter 4. Alright, let's talk about the tools of the trade. These are the resources that will give you an edge in the market, turning you from an amateur investor into a seasoned pro. First up, stock screeners. These are like powerful search engines for stocks. Platforms like Yahoo Finance and TradingView let you filter stocks based on specific criteria, industry, market cap, PE ratio, you name it. No more sifting through thousands of stocks manually, these screeners do the heavy lifting for you. Next, investment apps. These are your on-the-go command centers for all things investing. Apps like Fidelity and eToro make it easier than ever to buy and sell stocks, track your portfolio's performance, and even get real-time market news and analysis. And speaking of market news, you need to stay informed. Keep your finger on the pulse of the market with reliable financial news sources like Bloomberg or CNBC. But be careful of the noise out there. Stick to reputable sources and don't fall for every hot stock tip you hear. Chapter 5. Buying stocks is half the battle, knowing when to sell is where the real money is made. First, if you've hit your financial goals, it might be time to cash in some chips. If a stock has skyrocketed and helped you reach your target, don't be afraid to take some profits off the table. Remember, nobody ever went broke taking a profit. Second, keep a close eye on the company's fundamentals. If a company starts showing signs of weakness, declining earnings, or a shrinking market share, it might be time to reassess your position. Remember, you're investing in a business, and if the business isn't doing well, it's time to move on. Finally, selling can also be a strategic move to diversify your portfolio. If a stock has been a laggard, or you find a better opportunity elsewhere, don't be afraid to make a change. Remember, your portfolio is like a garden. It needs constant tending and pruning to thrive. Outro. Thank you for watching Smart Money with Jim. If you found this series helpful, like, share, and subscribe. Remember, knowledge is power, and in the stock market, knowledge is money. Your financial freedom is within reach. Stay consistent and stay informed. This is Jim signing off. Happy investing.